Welcome to Dr. Fred Markets. This is not financial advice. While most people scroll past the noise, a few take the time to understand what's really going on. Finance, crypto, artificial intelligence, this is where it all connects. You made the right choice being here. Let's dive in.
Movies are dying, but the real blockbuster is defense tech profits. Moana just face-planted with a $43 million opening weekend, one of Disney's weakest live-action launches ever. Meanwhile, global defense spending just hit a record $2.4 trillion, with the US alone dropping over $900 billion like it's popcorn money. And while Hollywood whines about box office fatigue, defense contractors quietly lock in multi-year contracts with built-in price escalators that trade like boring boomer stocks. Cliffhanger: defense tech now behaves more like a subscription business than a weapons manufacturer. Here's the connection no one on CNBC says out loud. The real cinematic universe today is the Strait of Hormuz, the South China Sea, low Earth orbit, and the chip supply chain. The villains are shipping choke points and drone swarms, not cartoon crabs. The hero is any company that sells the software, satellites, and drones that keep trade flowing and data centers online. And while everyone doom scrolls Hollywood's collapse, markets re-rate those stocks from cyclical war plays to permanent security utilities. Start with today. U.S. military just confirmed all vessels can safely pass through the Strait of Hormuz. Translation: one narrow waterway, about 20 miles across at the tightest point, as quietly handles around 20% of the world's oil. One drone strike there, and your gas, your food, your Amazon orders get repriced overnight. That's not geopolitics, that's cash flow risk. Now combine it with this. Nvidia bleeds almost 2% today, S&P dips, tech bras cry. But defense names barely flinch on days like this because their revenue doesn't care about box office weekends or iPhone fatigue. They eat from multi-year government budgets that already priced in the next crisis. And then you have the space and cyber angle. Rockets, satellites, secure networks. This is not sci-fi, it's logistics. Every ship tracked, every pipeline monitored, every data center protected. These are not weapons, they're infrastructure. Once a government plugs into that system, it doesn't cancel the subscription. Here's the one thing you did not know. Modern defense tech stocks behave like weird, darker utilities. Utilities get paid because you can't live without electricity. Defense tech gets paid because the global economy can't live without secure shipping lanes, satellite internet, and cyber shields on critical infrastructure. Hollywood can miss a quarter. You don't miss a quarter of patrols in the Strait of Hormuz. And every time there's a crisis headline, senator dies, leaders reshuffle, rockets fly, tankers get harassed, budgets don't go down, they go up. Nobody campaigns on, hey, let's cut the radar that stops missiles over our ports. So you get this twisted setup.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
Retail investors chase the next AI meme name. Institutions quietly roll into defense tech ETFs and contractors. Cash flows drip for decades, regardless of who wins elections or which princess remake tanked. Mechanism is simple. 1. Governments sign long contracts with cost-plus or inflation-linked terms. Defense companies front-load R&D and CapEx. 2. Once systems deploy, drones, satellites, missile defense, secure comms, they need constant upgrades, maintenance, and software patches. That's recurring revenue. 3. Geopolitical tension isn't tail risk anymore, it's baseline. That baseline keeps the order books full. So what does this mean for you? Sitting there watching Moana bomb and Bitcoin chop around 64K? You're staring at the wrong kind of content. The market already knows consumers are tired, but it also knows ships still move, cables still carry data, and governments are terrified of a single point of failure in Hormuz, Taiwan, or low Earth orbit. No, this is not go all in on war stocks. This is not financial advice. This is a reality check on where the durable cash flow lives when the entertainment economy stalls. 3 moves to stop thinking like a moviegoer and start thinking like a quartermaster. 1. Map the choke points. Look up how much oil, LNG, and trade flows through Hormuz, Bab el-Mandeb, Panama, Suez. Then look at which defense and security companies actually protect those lanes. Maritime surveillance, drones, satellite constellations, missile defense, cybersecurity for ports. Learn the list before you touch a ticker. 2. Separate old war from new war. Stop lumping all defense stocks together. Ammo and tanks are cyclical. Space, cyber, and network drones are infrastructure. If the revenue depends on one conflict, that's a trade. If the revenue depends on global trade staying alive, that's a business. 3. Treat defense tech like a weird dividend utility, not a lottery ticket. If you invest, focus on boring, backlog size, contract length, and percentage of software services revenue. Less boom, more billable hours. If they get paid to maintain, upgrade, and monitor, not just ship the missile, you're staring at recurring cash flow, not a box office bet. The real takeaway: the world doesn't pay for stories anymore. It pays for stability. You don't have to like it. Morally, it's messy as hell. But markets don't care about your feelings, only your blind spots. This is not financial advice, but here is the truth. If you still treat defense tech like a cyclical war trade instead of the backbone of a fragile global supply chain, you're watching the wrong movie and missing the only franchise Wall Street quietly renews every year. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.